the 29th of April. Very interesting day. Looks like Gilead Sciences may have a potential coronavirus treatment, which would be tremendous. That just came across the wires. The symbol on that is GILD. We're also streaming live on YouTube and also on Facebook. So hopefully this will work well. Just so you'll know, just going to give you the address for YouTube. It's www.youtube.com/c/Dallas Trading Floor. So all of my charts and everything will be available on there. So if you're watching me on TikTok, just move over there and you can see my charts as they move forward. So hopefully we're going to move forward here. Just wanted to indicate that that we are definitely in a uptrend. It's interesting because the uptrend is continuing, and I wouldn't have said this. I wouldn't have said this a few days ago, but there you go. It's definitely happening. I mean, there's definitely a market uptrend. The market is up 2.49% today. Wow, that is tremendous. So the direction of the S&P and the Dow Jones are up. A little bit lower on the volume, but definitely definitely interesting. Definitely interesting. So that kind of gives you a look at that. Now, I wanted to go over with you several potential ideas for trading this market. The Spyder is up, and it is well past the 50-day moving average. As you can see, that's the red line here. I'm going to show you what happened with this little green pointer here, and as you can see, it's moved above that. That's very bullish. I believe it's probably going to continue up until it gets to about this level, and this is about 308 on the Spyder. And what that will, I think we'll see a reversal there. Why? Because I do believe that we are going to test this low before we're out of the market. This is the low that was made on March 23rd. And this is when the Spyder actually hit 218, and then it bounced back up. And this is where all the stimulus happened that we're having in the market. Now, there's a lot of things going on because we're still not opened. We're still not all reopened in the economy. So it's still, the other shoe is definitely going to drop, and that shoe is going to be probably where we have a lot of people that just don't have any work, and a lot of people are unemployed. I mean, we've had the biggest increase in unemployment since the Great Depression. Will we be able to get the machine running fast enough? Well, the stock market seems to shrug this off. So I'm skeptical, but it seems to have shrugged it off. I just wanted to show you basically where we're at in terms of that. The Nasdaq is also it is also moving very nicely, as you can see. The same chart pattern that we had on the Spyder. This is a chart of the QQQ, which is the ETF that covers that, and again, nicely above the 50-day moving average. So we're definitely in, at least for the time being, a bull market. So, being that is the case, I have put together stocks that are near a buy zone. Now, what does this mean? Well, when a stock gets near a buy zone, that means typically it has the right chart pattern in order to buy it long. So the first on the list, of course, is no surprise. It's Apple, and it has a 288.35 buy point. It's moved beyond that. When I took the slide, I'll show you the next slide. It was slightly below that. Interestingly enough, AMD is on the list, Alibaba, Microsoft, PayPal, Atlassian, and Tesla. And the ones I kind of want to highlight are Alibaba, PayPal, Atlassian, and Tesla. So here we go. AMD, very strong action, even though it's down today. As you can see, it's down. When I took this slide early in the morning, it was down somewhat. And, currently trading about 54, but it has a 99 composite rating, which makes it potentially a good look. As you can see, heavy volume here. This is a very, very bullish sign. I am currently not in this stock, but I am looking to get in when we're at the 58 level, which is where the buy point is. Alibaba is another really strong example. It seems as if the market is coming back in China, so that's very interesting. We're seeing a very strong bounce back in the market, and this is why Alibaba seems to be doing so well. It's up $3.62 today. Now it's a fairly expensive stock at 204. But the volume's up well. This is definitely one to consider because it's making all the right moves. Also, it has a very strong composite rating of 98, so that's a very strong sign. Alibaba. The next one, and this is the one that I really want to show you. Now, when I took the slide, it has surpassed its buy point. Right now it's at 288.70. I think Apple is going to go higher. Amazingly, I mean, I think we may be good up until we're above we're definitely above the 50-day moving average here, and we're moving up very, very smartly. So I think that this might be good all the way up to maybe as high as 305 before we see any resistance. So this one's looking good as well. There's just a lot of stuff that's really breaking out that you might want to consider possibly putting your toe in. Now, the one I covered this stock yesterday. This is PayPal. I think that this is the stock that you want to really look at. Why? Because as you can see, it's up very strongly today, $5.80, which is almost 5% just in one day, a one-day move on PayPal. I believe that in the future, this stock will outperform Visa and MasterCard. Why? Because there are many unbanked people out there who, they don't have access to a bank or they can't afford a bank, but they can have a PayPal account because PayPal doesn't charge anything to sign up. So many people, they don't necessarily have a bank account. They just use the PayPal account. And I think this is a tremendous thing. So, we're seeing really, really strong movement here. I believe that this can easily be in in the 130 range. The buy point on this, it's right below the buy point. The buy point is 125. So we're not quite there yet. So we're not quite ready to buy. I'm not quite ready to buy this. When it exceeds 125, then I will be a buyer. And the way I do this is that I put in a limit order, and the limit order is to buy the stock if it's called a stop limit. And so if it exceeds a certain amount, then I buy it, but I don't buy it below that. I know it sounds very strange, but typically, typically you want to see support above the buy point in order to buy. So typically the way it works is you have a buy point, and then there's a chase zone of about 5% up from that buy point on up to where you should buy it. Now, you should add it in that range, but not below or not above. Why? Well, if you're adding it below, it hasn't shown the requisite strength yet to move higher. So that's the reason why you don't buy it until it has reached a certain level, a buy point. Now, beyond 5%, you don't want to buy it because for safety reasons. If you're buying it extended, what extended means is that beyond the 5% from the buy point up, then you risk potentially when stocks snap back, potentially losing more than you have to. So the ideal point to buy a stock is when it's showing certain characteristics. I typically like to see a composite rating of 95 or better. PayPal has a 96, which is excellent. I also like to see lots of conviction. And as you can see, there's a lot of blue bars here. These are the buys, and this is the market voting for this stock. I also like to see it moving with heavy volume. As you notice, the volume is up here, 21% over the normal volume, and it's a very strong volume. So we're seeing a lot of commitment to this to PayPal. I believe that a lot of funds are going to rebalance their portfolios, and they're going to move into stocks like PayPal, because PayPal is going to show growth, I think, coming out of this coronavirus situation. Now I get to Tesla. Now for full disclosure, I moved into Tesla yesterday. I bought it a little bit above the buy point, which the buy point on Tesla is 775.05. I purchased it. I purchased it at 778. So I was about $3 above the buy point. Again, I did not buy it below the buy point because it didn't show conviction. But because it's closed above the buy point yesterday, it showed a very, very strong movement. As you can see by doing that, and this is the reason why you want to do this, you can see how much it's moved up. It moved up 3% just from yesterday to today. And this is just this morning. And as you can see, very strong volume here. Now, there's one kind of not so good area, and that's the composite rating. It's only an 86 on the composite rating, but it has been moving up, and a lot of portfolios are putting Tesla in their portfolio. Why? Because the traditional automobile manufacturers like GM and Ford are having a lot of trouble. They have way too much inventory. Now, we will see what happens with Tesla, because they do report tonight, and hopefully it'll be a good report. Their factory in Shanghai is open and producing vehicles, and that seems to be going very well. And I think they're just about ready to reopen their factory in Fremont, California, and hopefully we will see good production numbers there. They have revised the numbers of sales this year down from 500,000 to 420,000. That's what the analysts are saying. And hopefully Tesla will be able to meet those. There definitely is a full order book, unlike with the other automobile manufacturers. Pretty much everything that they're going to produce this year, they already have pre-sold or have orders on. So that's a very strong reason that they are higher than just about any other automobile manufacturer. And believe it or not, the number one sector, there's 197 sectors. The number one sector is the automobile sector. Isn't that amazing? But as far as I can tell, the only company that's really doing well, there's two companies that are doing really well in the automobile sector. One is Ferrari. It's nice if you can afford one of those. And the other one is Tesla. So I believe that Tesla is going to move into this luxury category. For years, everybody was buying BMWs and Mercedes. Those are the fashionable cars. Those are the very, very luxury cars. And I think they're wonderful. But now you're starting to see a movement back where the car to have these days, at least if you're a rich person, is a Tesla. And that's very much true here in Dallas. I mean, you would think, this is the place where, there's a lot of people in the oil business, but yet there's a lot of Teslas driving around. It's just amazing. And that tends to be a very sought after car. So I do think that the future looks bright for Tesla, even with all the problems that are going on with China and this coronavirus and everything else like that. So I do think that, we're looking good there as well. So, all right. Now, before I get to questions, I just wanted to do what I'm trying to do, a new segment here. It's called Chart School. Hey, you thought you got rid of going to school. Well, this is a chart of a head and shoulders pattern. Now, why would I put up this head and shoulders pattern? Well, if you were looking to short stocks, and I believe that we will have a correction in certain stocks, not in all stocks. The market in general is rising, but there's a lot of stocks out there, particularly in certain industries, like the like the real estate sector, the airline sector, and the ones that have heavy debt. You can tell when markets come into a phase like this, stocks that have heavy debts tend not to do well. Now we're in a sort of a momentary deflationary period. What do I mean by that? Well, when cash is short and when demand drops, you have what they call deflation. And in deflation, cash actually becomes more valuable than commodities. So, for instance, the price of oil, I mean, it used to be at $100 and it's now below 20. Well, that is very deflationary. Why is it deflating? Well, because the demand has dropped. You can only sell oil if there's buyers, but if there's no buyers, then the value of oil goes down. And so all of the producers that were producing that oil that have booked their reserves, they're all having to write down their assets. So that's very deflationary. And in a deflationary market, certain companies are going to fail. Now, how do we find out which companies are going to fail? Well, one thing is we look for this particular chart pattern, and this is called the head and shoulders pattern. As you can see, typically the market will move up, and then on this 50-day moving average, that's the red line here that we're looking at. So the black line in this particular chart is the 10-day moving average, which appears on some of the charts. The 50-day moving average, though, is the one that we're really looking at. And as you can see, as the market moves up, it moves with the market, and then it will move up beyond the market. And then there's what they call the left shoulder. The left shoulder typically will be a little bit higher than the right shoulder, and then we'll cover that in just a second. The left shoulder comes up. There's a topping, and this is what happened in many of the stocks about March 20th to 23rd. That was when it moved really drastically down. About March 15th, there was a topping in the market, and we had this down movement. Okay, you see this down movement, how it broke below the 50-day moving average. Then we had another little rally, and then we're in this rally section now. We're rallying. Okay, the stock market is rallying, and I'll show you this in another chart here, but the market is rallying now. Okay, and it's going to come above this 50-day moving average. And then when this tops, then we're going to see a movement downwards. And I believe that is the case with the market in general. So I want to move back here to show you the Spyder on this chart and show you how it is performing a sort of head and shoulders formation. As you can see, it's moved up, move up, and then it tops. This is the head here. Okay, then it comes down, and this is the right shoulder. This is the right shoulder here. You notice how it's lower than the left shoulder. So this is a classic shorting pattern. This is on the whole market in general. This is the QQQ. So now we are moving, and then we move down even more. Now we're in a segment now where it's coming back up, and this relates to a shorting, the ideal shorting, the ideal shorting time. And let me show you that on the actual illustration chart here, really quickly. There we go. Oh, there we go. Okay, so you can see it's come way down, just like the market did. Boom, 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 boom. And then it bottomed. And on the Spyder, it bottomed on March 23rd. It's then been moving up, and it moved past the 50-day moving average and past the 10-day moving average. Then it retraced a little bit. Then it came back up. We're in this portion now where it's moving up, and eventually that will break and it will move lower. Let me go back to this let me go back to the Spyder and show you that. Let me see if I can pull that up. Okay, well, there we go. All right, see if we can pull this one up here. All right, So let me go back to where the Spyder is. Oh, that's the Nasdaq. There we go. That's the Spyder. Okay. If you can see, it's moved up, and now it's moving past this line, and it's going to move up here, and then the ideal shorting point probably for the market will be about 310 on the Spyder. So that kind of gives you a quick overview of what we're talking about when we're talking about the potential to short this market. Now, right now we're in a confirmed uptrend, so we don't want to we don't want to we don't want to be short right now because we're in a confirmed uptrend, and we've moved past this 50-day moving average, but we're getting to the point very shortly where we'll have a classic short on the market, but we're not there yet. So right now the thing to be is long in the market. All right, so thanks for bearing with me on this, and let's see if we can have some questions. I've yammered on, and there's a lot of people here, and there's a lot of questions, and so I'm sorry that I just talked Tesla earnings. I think Tesla, by the way, is going to be better than they expected. And the reason I believe this is because in the overnights, it seems to be moving up. I got into Tesla. I bought 100 shares yesterday at 778, and I did this because it exceeded the buy point, which I showed you just a second ago. It exceeded the buy point of 775. Here's the chart online. Here's the chart of Tesla. I believe that we have almost a perfect cup and handle in this. Now, the cup and handle formation, it's different, obviously, than the head and shoulders foundation. The cup and handle formulation is the best of all of the bullish chart patterns, and this is what Tesla has right now. It's a cup, and then there's a little bit of a handle, and boom, we're moving up. So I'm very bullish on Tesla. Probably right now, the best time to buy it will be right after it announces. Hopefully the announcement will be good. And I think that we could ride that up probably maybe even to the 8s, maybe to 850, 860. I don't know. But I do think that Tesla is going to move higher after the earnings today. But, again, it's all a guess. So you just look for the best chart patterns and you try to go on that. Also, if you do this, it's best to, typically what will happen is when an announcement happens, there will be a fall off in the stock price. So I just want to be very clear on that, because typically that is the old adage, buy on rumor, sell on news. So when the news happens, even if it's good news, the Tesla will probably retrace a little bit. But if we can stick above the 775 buy point, then I think we're off to the races, and Tesla actually may go higher. It may go back into the 8s, and I think that there's a very good likelihood that it will if the numbers are good this evening. And that's for Tesla. Okay, so hey, it's your birthday. Hey man, Axel, congratulations. Have a good birthday today. Any view on Tesla earnings? I think that they're going to be fairly decent. Don't want to brag, but my SPY calls are 200%. Thank you, man. That's awesome, Bobby. You are a rock star as usual. You're a rock star on your SPYs. Doing nice stuff. Here's the thing. Here's the thing that everybody tells you to let your profits run. I'm of the view if you're up 20%, take some off the table and spend some money and go out and have a good time. Well, I can't really go out in this coronavirus thing, but take a little bit of swag off the table, because you definitely earned it. So that's awesome. That's awesome. I think you're doing great. And by the way, there's no shame in bragging when you're right. So I think that's great. I really do. It's awesome. What's your on the options for AAL? Let me take a quick look here. I'm going to move over here. Let me. I don't have the options up on my screen on the podcast here. Oops. Let me see if I can get the AAL. Okay. All righty. Okay. American Airlines. Okay. Yeah, this is a very, very weak. Here's the thing on these. I would be, okay, I would not be a buyer of these. I do believe that American Airlines actually may close lower. So I would, on this one, I think a safer bet is to sell a naked call. And I think a good naked call that you might want to look at selling would be the May 15th 1350 call. Well, that's not even that good. Yeah, the May 15th 13 call. It's trading now for $1.05. So for every contract, you could make $100. I think I think it's fairly likely that American Airlines will drop below. Will not come out of this doldrum. So I think that you're fairly safe. I wouldn't buy the call. I think you'll lose if you buy the call. But if you were to sell the call, I think there's a good chance that you would win on that. So that's my help. I am suffering from the worst case of any tips. So preparation H. Okay. What do you think we'll retest? When do you think we will retest the March lows? I don't know, but I do believe that as the Spyder gets closer to the 305 to 310 range, and we're at 292 right now, I think that the likelihood of us testing are increasing. So I do believe that. I do believe that. But right now, we're in a confirmed uptrend. So you don't want to be shorting in a confirmed uptrend. You want to wait until the market changes, and we're in a correction. We're not in a correction right now, believe it or not. Its direction is a technical term where the market has retreated over 20%, and we're almost back. We're within about 11% of the March high. So it's amazing how much it's come back. I mean, this has snapped back like you read about, but of course it's been fueled with jet fuel. There's all kinds of money that is coming into the market, and so it's the kind of thing where, there's just a lot of there's a lot of stuff in the market right now. There's a lot of cash that's coming in. So that's true. What do you think about Starbucks? I think Starbucks is going to be very weak, and the reason I think is because their business model basically is going in, having some coffee, getting some free Wi-Fi, clean bathrooms, that kind of thing, and hanging out and drinking some overpriced coffee. And that's a great thing when everybody is doing that. But in this coronavirus thing, I don't think their model works that well. So I am bearish on Starbucks. It may be a good short. Let me take a quick gander to see if I can see what the situation is for them in terms of a short. Its symbol is SBUX, of course, as we all know. Starbucks. It's trading at 77. I think that there's definitely some. Yeah, this could be very much of a short. It's trading down a little bit today. I don't think that the report is going to be very good. It's true they do have good numbers in China. But I still think that hanging out with people to get the coronavirus and drinking overpriced coffee, I don't think that works in the short term that well. So I am very negative on Starbucks. I think this is a good short candidate though, but not quite yet because it hasn't topped yet. Well, it did. It did top but way back. So I do believe that we have to see it. We have to see a little bit more time. This may be an excellent shorting candidate. You should be making a watch list of potential shorts because you can make money shorting, and I always do when the market is going to retrace. Not necessarily the whole market, but certain stocks. Now, one of the things about Starbucks, it doesn't have a lot of debt, so it's pretty stable in terms of its financial situation. I just don't think that their model going forward is going to be as successful as it's been in the past. So I think it's a short. Let's see. What do you can you say? Okay. All right. Holy shit. My spy calls. All right. Oh, cool. All right, man. You're cool. Yep. Bitcoin is pumping. But we need a bank account linked to PayPal to use over a couple $100. Yeah, that is true. That is true because there's certain requirements there, but you don't necessarily. You can have it. You don't necessarily have to, to do that. So I do believe PayPal is a very good buy right now. Just my opinion going forward. You can get a bank account like at a credit union and attach it if you want to. So that's a good way to go too. What is a composite rating? Thank you very much. A composite rating is a proprietary rating that basically goes in and looks at all of a number of factors. One of, do they have rising sales? Do they have, is their top line revenue growth good? There's many of, is it in a leading category? All these things go into looking at whether or not there is whether or not a composite rating is happening. So let me just kind of run down the things that go into making the composite rating. So let me pull this up on my other screen here. Oh, there we go, PayPal. All right, and then I'm gonna do it for PayPal. Let's see. Okay. Well, no, it'd help if I spell it right. It's symbol PYPL and PayPal Holdings. And let's look at what goes into the composite rating for that. All right. This is coming up here in just a second. Okay, basically, what the composite rating is that it, first of all, it has to be relatively high performing in its particular sector. And in the payment sector, there, MasterCard is, PayPal is number 3 after global payments, MasterCard, and then PayPal, and then Visa, but PayPal now has overtaken Visa, so it's actually moving up. Square is in there as well. It's number 5. Also, the industry, you have to look at the industry ranking. There are 197 industry ranks. Currently, the payments area is number 97 on that list. Also, the relative strength of the group has to be fairly good, and it is. The payments area is considered a B+, so it's pretty good. Another thing that is really important in the composite rating is, are their earnings per share going up? Well, they are. For PayPal, it's going up 25% from last quarter. That is absolutely excellent. And the question is, how many quarters of earnings per share acceleration have they had? Well, they've had one, because they're now starting to move positive, but it looks as if it's looking better for them. And so you've got to see that they're moving up. Also, what is their growth rate? Well, believe it or not, PayPal is at a spectacular growth rate. Over the last 3 years, it has grown 36% a year. So it's quite good. So that kind of all goes into the composite rating. I typically like to look at stocks to buy long that have a 94 or better composite rating. And in the case of PayPal, We definitely have that. So let's see. Okay, go back here to PayPal. Oops. Apple, another great stock. PayPal Holdings. PayPal Holdings. It has a 96 composite rating, so that kind of gives you an idea. So it's really in the top 4% of all stocks currently to buy. So that's why you're stacking the deck if you're buying the very best stocks at the very best times. And why? What's the very best time? Well, the very best time typically is when it exhibits a chart pattern that's very, very bullish. And this has a cup and handle chart pattern, which is the best of the chart patterns. So once it exceeds the buy point of 124.55, there's a high likelihood that it will continue higher. And that's kind of how I evaluate what candidates to buy and what candidates not to buy. Now, here's the thing. In your portfolio, you should not have 25 stocks. You should only have 5 or 6 of the very best stocks. And that's what I do. So let's see. That was a composite rating. Why not Square over PayPal? Well, Square is very good. Square actually has a slightly lower composite rating than PayPal. It's number 5 on the list, whereas PayPal is number 3 on the payment processors list. So it's just a different way of looking at it. Square is extremely strong, and it's in an extremely strong area. It's just that the numbers for PayPal are a little bit better, and PayPal's a little bit more expensive stock, so that might be a consideration as well, because you might want to buy 100 in 100 lots. So let me take a quick look at Square. I agree with you. I think Square is excellent. It's up very strongly today, and it's trading for 65. So approximately half the price per share of PayPal. But in terms of crunching the numbers, PayPal is slightly better than Square, but Square is excellent stock, and it has a tremendous it has a tremendous ranking. Now let me take a quick look at Square to give you exactly what the ranking on that would be. Let me see. I believe Square. Yeah, Square has a composite rating of 91, so extremely good, extremely good. I mean, it's outproducing many companies, but it's not quite as good as PayPal with a 90 with a 96 rating. A 96 rating is really, really hard to get, and also when you get a rating like that, it typically connotes that it's possibly that there's going to be a move upwards in that stock. So that's the reason. Just sold SPY calls. Yeah, nice, man. No cover, original investment. Yes, sirree, Bobby, you made an excellent deal. And by the way, selling selling calls is a great way to go. I do very well doing that. So playing with the house money now, excellent. Okay, by the way, anybody that wants to do it, when you get it up like 20%, that is awesome. When you get that kind of money, sell off to your investment. Then you're playing with the house money, and I mean, yes, you can lose, but you can make a lot more, and you don't have to sleep. You can sleep at night because none of your capital is being disturbed. That is an excellent move, Bobby. Rock on, man, rock on. Watching. Oh, hey, man, watching from San Antonio, one of my favorite places, by the way. Very, very nice. If any of you have a chance to go to San Antonio, do it. It is a wonderful place. It really is. I mean, it's a very nice town, and there's a lot to do there. It's a real fun place, and the weather's great. So I just thought I would give a plug for that. My family comes originally, though I was born in California, originally from right up the road from there, a place called San Marcos, Texas. Also very nice. Not quite as nice as San Antonio, though. I think San Antonio has more to do than San Marcos does. But hey, glad you're watching on television. USO was $2 yesterday. Okay, what happened with USO? Thank you for telling me that. Okay, what happened was a reverse split. You're like, wow, how could it go up that much? Well, it didn't. Basically, what happened was that USO, which is the oil ETF, was moving lower, and they didn't want it to kind of, because there's requirements that you have to be, I believe, above $2 for a quarter. If you're below $2 for a quarter on terms of share prices, you can get delisted. So in order not to get delisted, they did what they call a reverse split. So I believe it was an 8-to-1, a 1-to-8. I don't know, 1-to-8. I think it was something like that. I have to look it up. But basically, if you have 8 shares, it becomes 1 share. And so therefore, it boosts the stock price up so that it doesn't get delisted. So they had a lot of trouble. At one point last month, they were, well, at the early part of the month, they had contracted for 30% of the oil in West Texas. And of course, there was no market for it. And they had negative, and potentially there was no places to store it. So, you know, unfortunately, it went down, and they had to do the reverse split. So I hope you weren't in it. It was really not so excellent. Please, can you please look into USO? Okay. Well, as I say, here's what happened with USO. USO is an ETF that takes contract positions in the delivery of oil, crude oil, typically in a place called Cushing, Oklahoma. Cushing, Oklahoma, by the way, is where all of the pipelines, most of them, not all of them, but most of the big pipelines come together in the United States. And there's a lot of storage there. Well, what happened with this low price of oil, this lack of demand, is that the forward contracts for oil, nobody wanted them because there was plenty of oil out there and nobody was driving anywhere. And, you know, it was just a situation where they couldn't take any more oil. So actually, there was a negative price for the forward contract. So basically, you were going to have to pay people to store it because there's no storage space left. So this USO loaded up on these contracts, and unfortunately, they went down and they had negative rates. So the USO just went into the ground. Now, because the stock price went so low, they needed to do a reverse split in order to get their stock price up above $2 so that they could continue to be listed on the exchanges. Because if you go below $2 on the major exchanges like the New York Stock Exchange or the NASDAQ, you get delisted and you go into what they call pink slip penny stock land, which a lot of people like to play in that, but it's not really, you can lose a lot of money in that area. So they did a reverse split. They got the stock up. It's now $17, but really it was an 8-to-1. So I think it was 8 for every 8 shares, you got one of the new USO. So I wouldn't be buying that one because the people that are going to have that at $17, it may actually go down even more. So not a good thing. They may have to do another reverse split. I think there's a limit on the amount of reverse splits that they can do, but I'm not sure exactly what that is. Tesla canceled plans to open Fremont. Ouch. Okay. Well, I may be eating some crow here because they were gonna open Fremont, and hopefully the stock won't dive too much. Let me take a look at where Tesla is trading. Fortunately, I sold a call against this, so hopefully that will protect me somewhat in that. And it's probably going to fall. It probably will fall on that news. Yeah, it is. It's moving down. Well, no, it's 788 still. Okay, it's moving down today a little bit, but it is not. It's not as bad as I thought it was. Okay, well, we shall see. It's probably going to drop, probably to the 740 level, I suspect. But we'll see what happens with the announcement. It is definitely red. It's definitely red, but it's up where it's up over where I bought it yesterday. So because I bought at 778 right after it had cleared the 775 buy point. So hopefully the news is good. Now, when you're in a situation like this is what I usually do if I'm unsure and I'm buying before earnings, is I will typically buy it. I will sell simultaneously a call, very short call, at essentially the price that I bought it, or very near it, as a strike price, as protection, downside protection on the purchase. That's exactly what I did when I purchased the shares at 778. I sold a 780 call, which expires on May 1st, and I got a premium for that. It was a significant premium, $46 premium. So that gives me some downside protection. That's how I do it if I am not totally convinced or I'm buying before an earnings call. I need some protection. So if the stock does move decisively above, it does move to 780 or above, then I will be, I will have to exercise, but I have the shares, of course, to do it. So there you go. So hopefully we'll have a good call. But I wish they were able to open Fremont, but I understand. That's the deal. Your live streams are very thank you, man. I appreciate that. Wow. I really, really appreciate that. By the way, I do put charts up kind of with buy points on certain stocks and various things. And they're available on YouTube. Hopefully it's working today. I've had some issues, and also on Facebook Live. I've actually had more success on Periscope in terms of technical than anything else. But my YouTube address is www.youtube.com/c/Dallas Trading Floor, all one word. And that's where I'm putting up my charts, because I can't show them, unfortunately, on TikTok. I like TikTok better than any of the other platforms. By the way, TikTok, for everybody out there, is the fastest growing social media platform in the world. And that's one of the reasons I'm here. Is I looked and I said, wow, where can I get a start where the people are? And they're on TikTok. So there you go. Thank you. Okay, any stocks recommended right now? Okay, well, by the way, thank you. Oh, okay. Any stocks you recommend right now? Well, right now, I kind of want to go over 4 stocks that I think you might want to consider on recommendation. I'm going to give you basically 8 stocks. Well, I'm going to give you 7 stocks right now. Okay. So if you have a pencil and you're not watching this on my live stream on YouTube, maybe take this down with a pencil. That would be helpful, because I'm going to give you some numbers. Apple is the first one. There is a cup and handle chart pattern. This is a very, very good chart pattern. And it is a buy if it exceeds on close, at the close of the day, it exceeds 288.35. That is the buy point for Apple. So what does that mean? Well, it is, you want to be possibly long buying that stock if Apple closes above 288.35. Now, does that mean that it's always going to, it's guaranteed to go above that and keep on going? No, it doesn't. I wish it did. If it did, my job would be a lot easier. But there is a high likelihood that if it achieves 288.35, it will continue higher, because that's the momentum. That's how the momentum is trading. Now, the second one is AMD. Well, it sold off a little bit, so it's below this number, but it does also have it has a cup base. It doesn't have a cup and handle. This is not quite as good a chart pattern as the cup and handle, but it's a good chart pattern all together, all things considered. It has a buy point at 58.73. So 58.73. So if AMD in the next few days, or tomorrow or tonight or whatever, exceeds 58.73, then AMD has potentially a very good a very good buy point on it. Now, unfortunately, AMD has been falling. It's currently trading at 54. So right now, based on the technicals, AMD is not a buy. But if it exceeds 58.73, it is potentially a buy. So there you go. Now, another one, the third one that I want to talk about is Baba. This is Alibaba. This is the big company in China that does, it's kind of like they call it the Amazon of China. It is a tremendous company. It is showing a cup with handle, which is, again, the best chart pattern. And Baba has a buy point of 216.20. So let me see where that's trading currently on my other screen. That's Baba, B-A. All right. So currently Baba is trading for 204. So currently Baba is not a buy. Why? Because it's below the buy point. But it's definitely a watch list item. What I'm getting here is watch list items. These are stocks that have very, very good chart patterns. And if they break above these buy point numbers, then they're potentially buys to add to your long holdings. So that's something to look at. The fourth one here is Microsoft. The symbol on it is MSFT. Now, this has a multiple entry points, and this one is a little bit different because it's so heavily widely held. But Microsoft has a entry point at 180.10. Now, it does not have a cup and handle, but it has an entry point at 180.10, which is a very good, which is very auspicious for this stock. Currently, it's trading right below that 176. So, if Microsoft in the next few days achieves a price above closing 180.10, then you possibly want to look at getting long on this stock. You want to buy this stock because it's probably going to go higher. Again, it doesn't have quite as good a pattern as Apple does currently with the cup and handle, but it's still an excellent pattern. The sixth one, the fifth one I'd like to talk to, and I talked a little bit about this, is PayPal. And PayPal has a, it is up, and this is the one really that I think is the one. 122 is where it's trading for right now. It has a cup base. It's not as good, it's a pattern as Apple, but it's still excellent. The buy point on this is 124.55. So 124.55 on PayPal. It is literally only $2 away from that. So if it exceeds that on a close with relatively better than average volume, then PayPal is probably going to go higher based on this chart pattern. The sixth one that I'd like to talk with you about is Atlassian. Symbol is TEAM, team. I have traded this $80. Team is now trading for 152. It is a buy right now. It is a buy right now. The symbol on this is TEAM, team. And this one is possibly one that you want to look to add. Now, the last one is Tesla. I bought Tesla when it exceeded its buy point yesterday. The buy point on Tesla is 775.05. I bought it at 778, which was the buy, which is slightly above the buy point. Again, I'm trying to eat my own dog food here, and do that. So I bought that yesterday, about 100 shares, and I went in. I went into it, but I also sold a call to protect myself on the downside. But again, this has a very good cup with handle, the best chart pattern that you can get right now. So at over 775, share with you. So I'll just run it down really quickly again, just so you'll know. So that's just, Apple, symbol AAPL, Apple. It has a buy point of 288.35. AMD, Advanced Micro Devices, has a buy point of 58.73. Alibaba has a buy point of 218.20. Microsoft, MSFT, has a entry of 180.10. PayPal, symbol PYPL, has a entry point of 124.55. Atlassian, which is called Team, TEAM, that's the symbol, has a buy point of 149.80, and it is currently in the buy zone because it has exceeded that. The other one that's currently in the buy zone is Tesla, and Tesla has a buy point of 775.03. Currently, Tesla is selling, let's take a look, TSLA. Currently, Tesla is at, currently Tesla is at 186. Okay, so this is a really interesting illustration here. Once a stock has exceeded its buy point, it tends to move quicker to the upside. That's why yesterday Tesla was selling for lower than 70 or 75. It moved through the 775 level, and now it's moved up to 786. So I believe that based on the technicals, there are two stocks that you want to potentially look at going long right now that have met all the requirements, and those are Tesla, TSLA, and Team, TEAM, which is Atlassian. So there, I just kind of give you hopefully a rundown, and hopefully you can see this. If you need to take a look at this, it's on my. It should be on. Oops. Content warning. That was serious part. What? Okay. Wow. Okay. Well, I've somehow gotten pornography on my TikTok, which I hope I'm not porno. I hope I'm not porno. It's just me talking. So, okay. What are the buy points based on? Sorry, I missed it. Oh, well, I could go into this, but they're based on the analysis. The buy points are based on the analysis of the charts. And I've done the cup and handle chart is the strongest chart, and that's I have a cup and handle for Apple, buy point of 288, a cup and handle of Alibaba, BIBA, 216. My cup and handle, no, not a cup and handle, excuse me, a cup and handle with Atlassian, Team, TAM, 149.80, and a cup and handle with Tesla of 775.05. I would like to go into this and hopefully later I'm going to post some information on how to read charts. But the cup and handle, trust me, the cup and handle, at least for going long, this is the Cadillac of chart patterns. Is the one you want to look for. And right now there are 4 that I have laid out that have this pattern, and there's 2 that have exceeded the buy point and are buys right now, and that's Atlassian and Tesla. So there you go. Thoughts on a late Disney call? I don't know. I would think on Disney on a May Disney call. Let me look at when I'm switching away from you here, I'm actually looking at another monitor, so I'm not hiding. But so let me look at Disney on DIS. Let me look at the calls in May on that. Okay, I'm going to look at the 21s. Okay, let's look at 14 strikes. Okay, you know what? I would possibly look. I think you could safely sell the 115. I would be a seller of the 115 call. I would be a seller of the 115 call. And I don't necessarily think you would even have to cover it. It's obviously less risky if you cover it, but I would be looking to sell the 115 May 22nd call. Why? Because I believe that you're going to see Disney move down a little bit because they're not going to be able to reopen their parks and until this coronavirus thing. So even though people think of them as they're streaming, and which is great, and all their other stuff, it's really they get most of their business from their theme parks and also from from their they also have a cruise line, which isn't unfortunately the right thing right now. And so that's what you're seeing in terms of where they're going there. All right, so let's see. Let me go back so I don't scare people here, because when I do this online, I'm looking it up and it's scary on the other thing. Okay. I said Team. Yeah, Team is currently in a buy zone. It's trading for 152 right now. The buy point on Team is 149.80. So I think that that's right. Okay, well, I have wasted another hour of your precious time, but I hope that everybody here, I really love doing this show. It helps me as well as you, because I can start my skills on what I'm going to buy. I'm probably going to be buying Team, it looks like, based on my analysis. I'm in Tesla right now, and everything else I'm not. I'm in cash. So But if you want to get more information on this, if you want to see the show with the charts and everything, go to my YouTube location. It's www.youtube.com, of course, /C/Dallas Trading Floor. And the replay of this should be up there hopefully within 30 minutes. I think it's still live, but you'll see it takes a little bit of time to post them. For some reason, it doesn't post automatically, but you can kind of take a gander at what stocks I have near the buy zones, the charts, and kind of everything else in case you want to look at that. And also my chart school, which I'm going to hopefully start as a feature, what different kinds of charts look like, how they operate. And the one I showed today was the head and shoulders. That is the chart pattern. You don't want to buy that for buying a stock long. That's for shorting a stock. So it's a little bit different application for that one. Can you can you put your YouTube in the comments? Absolutely. Let me do that really quickly right now so everybody can see that. I'm so sorry that I don't have this set up. I should have it set up better. But okay, let's see now. Okay, comments. Oops, where's my, there is my comments. Okay, it's www. YouTube youtube.com /C/Dallas Trading Floor. That's right, Dallas Trading Floor. Okay. And I think everybody should be able to see that, but that's the YouTube address, youtube.com/C Dallas Trading Floor. And so you can be able to, see kind of the charts and everything, and not just, listen to my voice. You'll be able to see something. Great. Okay, cool. Let me show, I've got a comment here. Wow, this is nice. I always like to hear from everyone. By the way, on YouTube, I can actually show the comment to everybody. Do you think everything is happening is sustainable? I feel like we enter the lows again. Well, here's and we'll be back. We could be back in the bull market. Well, the market moves up and down, of course. That's no rocket science there. I do believe we're on a snapback rally. I don't believe that this is going to hold necessarily for a long time. I do believe that once we hit about 380 on the SPY, that's the Spyder, that's the ETF that I look at as an indicator. I do believe that we're probably going to go lower and we're going to test the bottoms of the market. But right now we're in an uptrend. So if you're short, it's not a good time to be short. But when that direction changes, and I'm a directional trader, when that direction changes, then we're going to move to being short. Right now, it's not a good time to be short because we're moving higher, at least based on the technical indicators. So that's in the long term. We are going to move. We're going to move probably lower. Oh, thank you so much, by the way. Thank you for saying that. I will link my profile on TikTok. I'm sorry that I haven't kept up with everything. I'm just trying to. I'm a little bit shorthanded, so I do appreciate that. I will link the YouTube. That's the easiest way to get all my all the past shows, and it shows all the charts and everything. So it's pretty helpful. But thank you so much for that comment. I really appreciate it. Thank you, man. Thank you for checking it out. And again, if you check it out, please like it. I mean, that's what they say, like it and all that stuff. I'm learning all the lingo. Well, as you can tell, I'm kind of an old fart, so whatever. Just a tad late. What are your thoughts on the oil ETF? I am bearish on the USO. I am so sorry. I'm not a negative person. I am bearish on the USO. I don't think this oil thing is going to get totally sorted out for a while. So I think that I think it's relatively dangerous to be in that right now. I don't like it. I don't want to play in the oils because they're being disinvested in right now. That's the reason I'm long Tesla. Not because I'm some great environmentalist, but I just think there's been a movement out of oils into different things. So I think it's going to be more dangerous to be in USO. It's not a bargain, even though it's cheap. It's not a bargain, and I just wanted to be clear on that. Will generally take longer than people think. Yeah, I think so. I think so. The drop is coming, but yeah, you need to be patient. Bobby, that is a really good. Thank you again. I really like your comments, and of course, you're making all kinds of money on the Spyder that I didn't make money on this time. But I think this is awesome. Yeah, I do think we are going to drop, going lower. So, at what SPY level do we get resistance? I believe, Raj, RJM. This is RJM. He's they're typing in from YouTube. I think the resistance is going to happen between 308 and 310 on the Spyder. Now, I have been wrong on this. I was saying 275, and indeed, there was some resistance at 275, but the market blasted past it because we got all the stimulus. So I believe the next level of resistance is in about the 305 to the 310 range on the Spyder. Currently, the Spyder is trading about at 296, I believe. Let me give an actual number here for right now, right at this moment. Okay, it's down a bit. It's 294.38. So it's below that 300 level. But when we start to get up to 305, 310, I think we're going to see some resistance. And that is based on the technicals that I'm looking at. And so that's when right now, we don't want to be short. But when the Spyder gets up to those levels, we want to think about moving short in the market again. Again, as I was saying, if you've been watching me for a while, when we started this downward motion, I indicated to people on TikTok to get into cash and get ready, and then that's what I did. I got into cash, and then I shorted the market, and I did quite well. Now is not time to be short because we're moving up, but I think we're going to see some resistance at the 310 level, 305 to 310 level. Now, here's the thing. Don't short the market until you see a definite bounce, but I do think we're going to see resistance at that level. So that's where I'm saying. But it's exciting times, man, and there's money to be made. And believe me, here's the thing about the market, and I just want everyone to know this. Everybody says there's a good market and there's a bad market. No, there's a good market and there's a good market. If you're with the trend, you can make money in a bad market. You can make money in a good market. You can make money in a sideways market. There's always places to make money in the market. And that's just it. The stock market, if you learn it, it is a perpetual money machine. I used to work a regular job, but I started making so much money buying and selling Microsoft that I quit my job as a financial analyst, and I've just been kind of trading stocks, and even in this bad market, I'm making money. So everybody can make money. This is easy. It's easier to become good trading the stock market than it is to become a good engineer, a good physician, and it's a lot more profitable. So I just want everyone out there, if you've had a few setbacks, okay, get up, brush yourself off, because we're going to make some money in this market, and it's totally possible. You don't have to be Bill Gates. You don't have to be Elon Musk. You don't have to be any of these people. You can make money as a regular person in the stock market, and you can make it money in good times and bad times. It just is a question of how you read the charts, and that's really it. So I have one more question. If it shoots above 310, that's on the Spyder, shall I consider it the start of a bull market? Well, actually, we're in a bull market now. That would be potentially the start of a bear market. Of course, as we all know, bears are kind of big and over you. That they tend to point down. Bulls tend to push their nose up. So that's an up market is a bull market, and a bear market is a downward market. So yes, I do believe that's true. Now, there is a technical description of what a bear market is. A bear market is a market in which there's been a correction from the high, of at least 20% from I can't remember how many days. I think it's 1 quarter if it's gone down. So we were in a bear market until they started putting all the stimulus in, because we'd gone down 35% from the high, which was happened on about March 23rd. We went 35% down, and we went down very fast. But now we've come back, and we're within 11% of the all-time highs, believe it or not, in the market. So currently we're in a market uptrend. This is why it's dangerous to short in this market. But when the Spyder hits about 310, I believe, you're going to see it have some resistance. You can't always tell, because a lot of things will happen. The Federal Reserve may intervene again, but I do believe that we're going to see a retest of the lows, and that happens every time that there's a quick drop in the market. Is that the market will move up, and then it will turn, and then it will go down, and it will retest that low, and then when that retest is done, then that's going to give us direction. Is the market going to continue on up, or is it going to continue sideways, or going to continue down? Obviously, but typically a market will retest within 3 months of making a new low, and it did on March 23rd. So I do believe we're going to have a retest, and I think that beginning of that movement down probably will happen when the Spyder reaches about 310 in terms of price. So that's the long and short of it. Anyways, well, great. Thank you so much, everybody, for looking at me online. And again, I'm on YouTube now. It's Dallas Trading Floor. So it's youtube.com/c/Dallas Trading Floor, all one word. And I'll show you the charts and everything like that. Also, if you can, please sign up for our list, because I'm going to try to be putting out stock alerts for everybody. And that is, and that is basically DallasTradingFloor.com. So just sign up, just put in your information, and we'll get something right out to you and ask a question. And by the way, I answer phone calls too. 214-233-5087. Again, thanks so very much for everybody, and bye right now for TikTok. I'll be back tomorrow on TikTok at 11 o'clock. See you soon. Bye-bye. And for everybody on YouTube and on Facebook Live, I will be back tomorrow at 11 o'clock, and hopefully covering everything that you need to look at. If you want to leave me questions, just hit me up at DallasTradingFloor.com, and I have a comment section in there, and hopefully I can get to the answer. And do look at possibly getting on our mailing list, because I'm going to have hopefully some updates on stocks that are near a buy zone and potential ones that you might want to look at for your watch list. Anyways, good talking, and I will be back tomorrow. Cheers and stay safe.